5 years after taking the company private, Dell will be coming public again, buying out the tracking stock of VMware, its cloud software unit that it owns roughly 81% of. VMware and the newly created Dell Technologies Class C shares are both up sharply this morning. Joining us now for a CNBC exclusive interview is Dell Technologies Chairman and CEO Michael Dell. Nice to have you here. Thanks for coming down.
Great to be with you. I missed you guys.
We missed you too. And now that you're going to return right here, I guess, to the NYSE as a publicly traded equity, that will be nice as well. You know, you've made no secret, though, the fact that you prefer to be private. What was the cost-benefit analysis that it was worth doing this transaction and becoming a public company again?
Well, in the last 5 years, a lot has changed. You know, we've completely transformed the business, become the essential infrastructure company, really changed the profile nature of the company in terms of our capabilities, a broad set of capabilities across the data center, software-defined, everything. 85% of our engineers are software. You look at our business last quarter, it grew 17%. In growth, you know, earnings were up strong double digits, and this was about simplifying our capital structure and exposing the value that we've created to shareholders.
But why was that worth doing again? I understand the simplifying the capital structure is certainly something that you might want to do, but why is it worth becoming a public company to do it?
Well, look, I think we went through a fairly exhaustive process that was disclosed in the 13D filing, and you guys reported on, a fair bit, and looked at all the various options, and came to the conclusion, along with two special committees, two independent special committees.
VMware and
exactly, that this was the best option.
The best option to do what, though? To simplify the capital structure? That was the end goal
simplify
here?
the capital structure.
And why was that a desired end, I guess?
Well, it's a bit too complicated, right? And at the same time, look, we have an extraordinary business that's doing incredibly well. We brought together the best assets in the industry. We've invested heavily. We've changed the trajectory considerably. And if you look at the original businesses that we started with, right, we've had 21 quarters in a row of growth in share in those businesses. We've been gaining share dramatically in servers. We're number one in revenue and profit in the client business, number one in revenue and growth in servers, number one in storage, virtualization. There's a broad swath of categories. And then you step back and you say, what's going on in the industry? And more broadly, there is a technology-led boom in investment that requires modern IT infrastructure. And Dell Technologies is the leading infrastructure company on the planet. And because we brought together Dell and EMC and VMware and Pivotal, we've captured the hearts and minds of the decision makers in this age of 5G and IoT and AI, and we're winning. And so, it's a great time to do this.
It's a great time to do it because of the state of the industry, because you're in a good position to do it. But you could have stayed. I mean, you're not giving up control anyhow, but you could conceivably have done all those things as a private company and continue to do them as you have, right?
You are correct.
Is it because Silver Lake wants eventually to sell what will be a 16 to 18% stake in the overall company? Is that why being public is a better thing?
No, they've been very clear about their intention to continue to hold, and they're very committed to the investment. And I'll tell you, I've asked them several times, hey, you guys want to sell? I'll buy them out, right?
Well, they've been in a long time and a partner of yours for quite some time.
And they continue to be.
And it's committed. A great investment gain for them as well, which, PE firms do like to put up.
Everything's working out pretty well.
Yeah.
So, look, we have a fantastic business here. It's doing extraordinarily well.
You would buy out Silver Lake if they actually wanted to sell?
That's not the transaction that we're here to talk about, right?
Yeah. The transaction we are talking about is taking out the tracking stock, which has been trading at a significant discount to the underlying value. But there were a number of other things you could have considered. Reverse merger was one of them, or just an IPO of Dell itself separately. Why was this the preferred method?
You know, we went through all the various options. Certainly the IPO was an option. There were other options that were discussed, and we concluded that this was, you know, the best of all the options. And you know,
why though?
It was a relatively straightforward path, and it's sort of a one-step simplification instead of a two-step simplification. You know, the option to go public was very much there, right? But then you would then later probably convert the tracking stock into the public common. And so you create a little more complexity before you have less complexity. And so if you could do it in one step, that certainly is easier.
Another question is about VMware. Of course, you control it 81% or so, and I know you got this.
We love VMware.
Do you want it to remain a public company on its own? Is that the plan?
Absolutely.
Here?
We want it to remain an independent public company. VMware's doing great. Pat and the team have done a fabulous job in moving the business for this multi-cloud era, and along with the kind of turbo boost from Dell Technologies with 40,000 salespeople, VMware is extremely well positioned.
So there's no plan down the road, conceivably, to consolidate that as well?
We have no plans to do that.
You made the case a few years ago when you went private that, the public market sometimes don't have the patience to wait out the kind of transformation that you now say the company has done. And we've seen other large companies kind of struggle to focus investors on the faster growing pieces of the company, IBM, Oracle, Cisco, whichever they are. You're now saying you're winning. You're winning against whom? Who is your competition? Who should investors view Dell Technologies alongside?
So first, I would say that, there's about a $3 trillion IT industry, and we're but a small, $87 billion company in the $3 trillion. So it's an enormous overall market space. We compete with a variety of companies. When we look at our business, we measure relative share. How are we doing? Are we gaining share? Are we losing share? We're number one in, as I said, like 23 different major categories of IT infrastructure, and we're gaining share in pretty much all of them. So, who are we competing against? It's the number 2, number 3, number 4. In many cases, for example, in storage, we're bigger than number 2 and number 3 and number 4, all combined together, right? and we're growing. So, and by the way, we look at share of the profits as or even more important than the share of revenue or units. But I think what's happening more broadly with this technology-led boom in investment is that the role of technology is fundamentally changing. And so you think any business out there, small, large, public, private, any type of business, is using technology today in fundamentally different ways than it was 5 or 10 years ago. And so the importance of data and the amount of data with all these billions of connected devices that are being created, that is creating kind of this tsunami of data and information that has to be used in real time to turn into insights on the edge, in a distributed core, and in clouds, on-premise, public clouds, and no company is better positioned to win in that than Dell Technologies, and that's why we're winning against our competition, and I believe we have a fabulous future ahead of us.
The changes that you've made at the company in the 5+ years it has been a private company, should we believe somehow that you were able to do things that you will no longer be able to do as a public company?
I do not believe that we won't be able to do that, right? I believe that given the structure that we have and the momentum that we have and the set of assets that we have, that we can continue to invest for the long term, and that is absolutely what we intend to do. We said it on our conference call this morning.
Yes.
And it will be clearly repeated. So look, any shareholder that says, hey, we want you to do this to optimize for the short term, not the medium to the long term, you came to the wrong company, right? I'm the ultimate long-term investor in my own company.
And you were previously, but now you have more control than you had when you were last a public company.
And it's interesting, it was almost exactly 30 years ago that we went public. And during the time we were public, the stock went up 13,500%. That was 27 times better than the S&P 500. Don't know if we'll be able to do that again, but we'll give it a shot.
Michael, I wanted to take your temperature on the overall business environment, because the last time we talked, it was January 2017 in Davos. It was the inauguration week of President Donald Trump. And here's what you told me then.
Optimism among my peers in the United States, and I think that's founded on what we see in terms of the high-quality team that's been selected, a number of the advisory committees that have been put together, as we've been involved in those discussions, and the basic agenda as a pro-growth agenda, we think is quite positive.
You were pretty optimistic. So there are no more CEO advisory councils, and a lot of that high-quality team has left the White House. Are you still feeling optimistic?
Notwithstanding those extremely accurate points, I'm more optimistic now than I was then about the business environment and what we're seeing going on broadly. So what I look at is the top 50 countries in the world. And what is our growth rate? Well, first of all, you have something extraordinary going on right now where almost every one of the top 50 economies in the world is growing. Then I look at our business, they're pretty much all growing double digits, right? and it's not just large or small or medium customers, and not just this product or that product. It's every product, every customer, every region, almost without exception, growing at double digits. So there is definitely a technology-led boom in investment that requires modern infrastructure, and turns out, we're the world's leader in that.
So you're not worried about limits being put on that from the United States and now others in the form of tariffs and trade protectionism? I mean, just last week we were talking about ways to curb Chinese investment in U.S. technology.
Well, sure, those are concerns that we all have to think about and address. They're not unique to our company. We're certainly paying close attention and weighing in with our points of view as to the importance of global trade.
Are you still weighing in with the administration, even though you're not officially on the CEO Council anymore?
We're definitely weighing in with our point of view on all of the matters as it relates to trade.
I mean, global supply, you are as global a company as it comes, with a global supply chain, manufacturing in places around the world. How concerned are you about this back and forth, particularly as it relates to China, which is an important market?
And we do have a significant business in China.
Yes.
China is our second largest market outside the United States to sell our products.
Right.
I still take the belief that the trade as it relates to the U.S. and China specifically, the countries are completely intertwined. It's mutual assured destruction if there's a massive breakdown in trade, and it will be an extremely bad outcome for both countries. No one will win, and so therefore I think the likelihood of that happening is extremely low. Now, will there be modifications to trade flows and trade agreements and that sort of thing? Probably so, but I think we're as well positioned or as correctly positioned as any company could be for that.
So like a lot of the CEOs that we've spoken to, you eventually think that rationality will prevail, I guess, to put it one way?
I do.
Michael, you mentioned 30 years since the company first went public. You've been its CEO for a long time. You're still a young man, don't get me wrong. I think we're relative peers there. Do you want to just keep doing this for years to come? Do you ever think about sort of another chapter, or are you focused squarely on remaining in this job for the long term from here?
I love what I'm doing. If somebody told me I couldn't do this, I'd go into some kind of a depression. So I absolutely love what I'm doing. You know,
And we'll keep doing it, I assume.
and absolutely plan to keep doing it for many, many years to come.
Well, listen, we appreciate your stopping by and look forward to talking to you in the future as well as a public company. Once again, thank you.
Thank you.
Michael Dell, Chairman and CEO of Dell Technologies.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.